Welcome, everybody, to the Real Money Show, the number 18778 Silver, and the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and there have been incredible developments in the gold and silver market. We are not in the bull market of yesteryear. We are in a brand new bull market. I tell Jerry, I've been telling my clients that this is not about owning gold and silver as a safe haven against inept governments, although that is still happening, but not worrying about the debts. This is about solutions. This is a precious metals bull market that is solving problems. And we'll talk about that throughout the day, throughout the show, and specifically what's been happening. Let's start with an update of what we're seeing in the markets, which is, for those who are obviously not going to be completely in tune with what's happening in the market, we've been seeing massive deliveries from London, from the LBMA, through American banks back to New York, and then it's being distributed, most likely going to the Treasury. And as we've been hearing over the last week and a half, 2 weeks, Elon Musk and President Trump have talked about, hey, we're going to go to Fort Knox and see if the gold is there. And I was listening to a podcast, Jerry, that was talking about, hey, you know, it actually could be a signal to the Federal Reserve. Hey, you better make sure that the gold gets put back. And I think the implications here for why it's important to have gold at Fort Knox and why it's important for them to go and see it. And again, we can get into the details of why it's being pulled over, what that looks like, the ramifications of the shell game ending in London. But I think when we're talking about why it's important that the gold be there, that they're looking to revalue it. It's right now on the books at $41 an ounce, and if they revalue it to close to $3,000 an ounce, the Treasury is going to find $800 billion. That's a lot of money to buy up U.S. debt, for one thing. It's a lot of money to make investments into things like a sovereign wealth fund, and it creates a lot of opportunities. Right there on that take, tell us what your take is on the benefits of this being part of the conversation, the benefits of 8,000 tons of gold existing at Fort Knox when they go to audit, whether it's next week, next month, et cetera.
So a lot of things happening, moving in the right direction. These are some huge, massive pistons that are moving all at the same time, and they're all the gold pistons, physical precious metals pistons, and that are very important to these countries, to their institutions. And what it's really highlighting, and I love what you're saying, I love the transition that we have moved away from just being a hedge and your insurance policy, wealth insurance policy, although it will always be those things for you, for your future.
True. Having
something stable is very important. That is going to mitigate against currency devaluation. But what we're moving into, all the roads are leading towards precious metals. So that alone is the opportunity. We don't know exactly how this is going to play out. We don't know what the end result is going to be. All we can do is follow the trends. And the trends began years ago when the Bank of International Settlements implemented rules to deal with the over-fractionalization of the market, rehypothecation, gold leasing. And this is what it's leading towards, a culmination of that. And is the gold really there? How many times over has this gold been leased out so someone can take this gold on their balance sheets and potentially get more loans from it?
And I think when you look at Doge, the question becomes: were those loans for the people of the country? Right? It's the people's gold. Were those loans that were made, the rehypothecations, were those made for the American people or for something else? Right? You want to make sure that that if you're going to borrow against the gold, for instance, that it's being done for investments in the country that is going to benefit the people. I think, though, as you revalue gold, there's no reason to continue to revalue. You know, if they revalue to 3,000, the Treasury finds close to $800 billion. Well, what happens when gold moves up $1,000 between now and next year? Mm-hmm. You're gonna want to revalue that again,
You're right.
And unlock the value of that again. the tier one capital you're talking about is about unlocking capital. It's saying, you go to the bank, hey, how much do you make? What kind of assets do you have? What kind of debts do you have? And this is all about building up the asset side of the balance sheet. And the gains to be had from this through the demand on physical gold are going to be massive. And as well, when you're not rehypothecating gold, it's putting demand squarely on the physical. When we look at what's happening at the LBMA, what we're finding out is it was a shell game. They never had enough gold to deliver to anyone who wanted the product. And if you were a small player and you decided, I'm going to be a big shot, I want to take delivery, they'd tell you to take a hike. Here's the paper, buddy.
They've done it before.
They've done it before. They'd say, that's it, you're kicked out. We're never doing business with you again.
Oh, that's your gold back there?
Right.
Show me your bar numbers.
So if you're a billionaire out of Australia, guess what? You're not getting your gold.
Bar numbers.
So who is big enough to demand that they're going to call you out on that scheme, right? Now, let me digress for a moment. We're in the precious metal business. We are in the storage business. We store physical precious metals for our clients, whether it's outside of a registered account or inside a registered account. I love that Scott Bessent the other day, the Treasury Secretary, said, the gold's there, and any senator that wants to come and visit can come and visit. And I loved that because that's what a Treasury Secretary should say, right? They should be transparent. That's what we do, Jerry. If someone calls and says, hey, is my product really there? The answer is yes.
Yes.
We can set up an audit for you. You can go and personally audit your holdings, hold it in your hand. You already have your inventory report. You'll go to the vault. You'll match the inventory, itemized inventory report, serial numbers with the product that you see right then and there. And you know that it's in a sub-account and it's fully allocated. And understand that we're regulated. You can't just start showing the same serial numbers to everybody. It doesn't work that way. But clients have the ability to go and personally audit. Now imagine if a dealer said, well, you can't come and audit your product. We're going to need 6 months for that, right? You got a problem, right? Your ears perk up. You go, something's not right here. That's what's happened at the LBMA. They're saying, well, it's going to take us 30, 60, 90 days to get this physical product to you. Oh, by the way, now we're getting articles that's saying, well, we're going to borrow it from our friends, right? We have to borrow it from central banks. Now, this is crazy, Jerry. This is how it works. Potentially. This is a bit of speculation, but you can see, Korea is not producing gold bars anymore through their mint, right?
Correct.
So you get a loan from the IMF. This comes from, what's his name? Eric Young. He was talking about this on a podcast recently. So you get a loan from the IMF, and they say, listen, you got to put some gold into the London vaults, okay, guy? Like we gotta make sure we're giving you a loan, but yeah, you got to just put some gold there. Right now, they're getting phone calls from not the IMF, but from the vault saying, I know you've got a loan from the IMF. We're going to need your gold.
Right.
We have to satisfy a client. We'll get you back your gold. It might be 3 years, 4 years, 5 years. Guaranteed it will not have the serial numbers that you delivered, but we need it because we have to deliver. So let's come back to who has the ability to take delivery from the LBMA and clear out this game.
Mm-hmm.
Three entities.
They are?
China.
True.
But they've already taken gold. We know that they've been accumulating gold for years.
They've never exported an ounce.
They've never have a need to play this game.
Right.
The United States government, the Treasury, could say, we want it. Or the Federal Reserve. Right?
Door number 1, 2, or 3. 2 or 3.
I'm starting to like this idea that Trump is saying, we're going to go to Fort Knox and see if the gold's there. And that's signal to the people who need to get the gold back into the coffers, because that's not their gold. It's the American people's gold.
Certainly a clear signal, that's for sure.
Now, what does that mean to you, the listener? It means that JP Morgan, Morgan Stanley, Bank of America, they know what's going on, and they are accumulating gold as much as they can at the same time, because they know this thing's going to be revalued, and their game is ending, but they could take advantage of the revaluing.
Yes.
Gold is coming back to the system. Tucker Carlson did an interview with Luke Gromen about gold. They talked about gold. It's all coming back. It's going to be remonetized. It's coming back into the system. What's old was never gone. It's new again. It's not a relic of the past. It is the future.
Yes.
And they're going to revalue it. And we're not even talking about where the prices are going to go or where the silver market's going to go as a result of this. We'll get into that a lot more coming up in the show. The number, 18778-SILVER. The website, guildhallwealth.com. If you want to own physical gold, physical silver, make sure if you can't hold it, you don't own it. It's got to be either you take it home or you have it in a vault that's fully allocated and segregated to you, fully secured and insured, the ability to get your serial numbers, the ability to buy and sell on a phone call so that you have that liquidity. And then as well, you can do that within your registered account. The number, 18778-SILVER, the website, guildhallwealth.com. Jerry, in the last segment, we were just saying we truly believe gold is going to be remonetized and it's going to be used as collateral. We're going to talk about the Basel III rules and what a tier 1 asset is and how that becomes integral to the gold market. But you're seeing interest in the gold market pick up. These central banks have been buying at record rates over the last several years. The BRICS side of it has. And you know what's interesting, Jerry? On this very show, we've talked about the fact that the BRICS, while they've been making moves, have never made overt advances against the United States hegemony of the dollar.
Very true.
They've just quietly said, oh, we're having some meetings over here. We're accumulating gold over here.
Just ruffling feathers.
Yes, we have to sell treasuries because you weaponize the dollar against us. No offense, but we can't trust that, right? We'll see what happens on that end. I think gold is a universal asset, and I don't think it has to be an adversarial tool.
No.
So that's my own personal belief. We'll see how it all plays out. But we do know these central banks have been accumulating, and a revaluing of the gold is integral to all of them. I think a lot of people are worried about the debts, so they should be, and concerned about how it gets paid off. But it's also equally important to have the asset side of your balance sheet increasing. And gold's undervalued. It's been undervalued for a very long time, even though, as we like to say, it's up over 700% in the last 20 years in Canadian dollars. It's still actually undervalued when you consider the cash that's been printed and the debts that have been created. So gold has a long, long way to go. I personally wouldn't be surprised at this point, and I'd love to get your thoughts on this, Jerry. $1,000 a year. It might be like 36, 38% gain this year, which we saw last year, by the way. But if another $1,000 move up next year, it's a 30% move. And $1,000 the next year after that you're looking at a 25% move, right? So every year you're tacking on $1,000, which is big, big money to these central banks and the Treasury. But the percentage is actually decreasing. That's why it's important to get in early. Mm-hmm. What are your thoughts on that?
I think we have tremendous topside potential. The direction is clearly higher. Even after today's pullback in the market, we are seeing a clear direction. The direction of gold is very evident. The short-term bumps and some profit taking is what they're saying is just a normal part of any cycle.
The contracts are closing.
The contracts as well. There's also inflation news coming out tomorrow, the Friday, that could potentially suggest only the 2 rate cuts this year, which is what the Fed Watch is showing. That's about 55 basis points further of easing and cuts. And we're also waiting for some speeches, but the same goes. As we know, gold has already broken into all-time high territories. There's no ceiling on the gold right now. And despite the pullback, it's still in the 2,900 level. It's still holding very firmly. The pullback is going to be very short-lived. Actually, 28.85 right now. This is a huge support level, and the silver at 31.40 is a good pullback zone. The Canadian dollar as well has lost quite a bit this week as further information and further fears of the tariffs coming out next week and it's really showing some uncertainty for most people. But again,
the tariffs got delayed though
until I think next week. I believe it's going to be
no, till April.
Until April 2nd.
Yeah.
So they're coming out. They're coming around the corner. We were going to see some more tariffs, and ultimately the main story though has to be this move towards the repatriating of gold, because once you repatriate, the next thing you do is you audit. And then you have a potential revaluation. The Fed has that tool on hand. The Treasury has the tool already, like they do have it in Holland. But this is a big move away from what has always been corruption. We've had corruption in the financial space. We've had corruption from LIBOR to FX to, why? Because we rely on a fractional reserve system. And if you have a fraction of some digital money sitting in a bank, it'll go on forever. You can fractionalize bonds. That will go on forever. But you cannot...
Musical chairs.
The musical chairs. But guess what stops the corruption? It's the physical asset, the gold, the tier 1 capital that's going to bring the solution, as you mentioned in the previous segment. It will bring light to all of the darkness. The Doge Canada of the world is coming.
You know what?
And the transparency with the Federal Reserve practices. The Federal Reserve, the policies, the printing, the quantitative easing has led to some serious debt, tripling the Fed's balance sheet to over $8 trillion since 2020. Of course, you released inflation. That's why we're seeing prices of everything going through the roof.
It's funny that you're saying that, because it's reminding me of what Ron Paul said. He said gold is honest money, which is why it's disliked by dishonest people.
And when it comes to an end, Rick Santelli from CNBC, he said, if you trade in paper, if you own those ETFs, I'm talking to you, if you own these gold ETFs and certificates and you want to have some exposure to gold through some shares, go right on ahead. But the move is repatriating of the physicals. Rick Santelli said, if you trade in paper, the notion of many who trade gold, if the financial world comes to an end, maybe a reset, they're gonna go after the gold. If you're playing in ETFs, he said, you're going to have a piece of paper.
Oh, they already are going after the gold. You're seeing redemptions from the ETF massively, and the only people that can take delivery of gold and silver from the ETFs are major players. Now, it's not going to be enough to put all the gold back into the Treasury, but it is a bit of a piggy bank, right? Definitely. It's interesting because you could draw a parallel between in many respects, gold and silver investments with what's been happening at the LBMA. Can you ask for delivery? If you have a pool account, a certificate, an ETF, a gold-backed fund, can you take delivery? The answer is most likely not. I mean, there's some mechanisms in place. Are you a big enough client to make an exception? Sure. There's always a few exceptions there. But with Guildhall, if you have a depository account and you take delivery, bang, it's going out to you right away. If you have a registered account, okay, you have to pay your withholding taxes. There's a couple of little tiny hoops, so it's not going to get there in 2 days, but within a week, your product is being released to you. It's your product. If it's a TFSA, quicker, because there's no withholding tax and less administrative stuff. But there's no one holding you back. I always tell anybody that I've spoken with, whether it's a RIF withdraw, a LIF withdraw, someone taking their product out of a TFSA because they feel like, hey, I'd be more comfortable if it was at home.
Right.
I always make a point to tell our clients that I just want you to know I'm going to try to do this as fast as possible. We don't see you as leaving us. You're still our client because you've still purchased the product from us. And this is what it's built for. It's built for you to be able to do this, whether it's because you want the product at home, you feel more comfortable there, peace of mind, or you're testing the system. Mm-hmm. I'm always up for that.
Test it out.
I don't look at it as, oh, I'm losing a client. And, I know other companies in the past, you want to take your bat and ball and go home, they charge you out the wazoo.
Yeah.
They go, oh, okay, all right. Yeah, thanks for your business. You can't
let it go.
You can't treat business like that.
No.
You're still a gold owner.
No, I appreciate those questions. I love when people ask me those tough questions about, swapping a product. This is the important thing about the serialization of the bars, and why we will never compromise on that. That's what makes Guildhall different. There are other dealers out there that will not offer you bar numbers. Well, that alone shows that there could potentially, not suggesting that it will ever happen, but substitution of bars, swapping out of bars. This is what we're seeing around the world. The reason why you want to prevent that is to prevent the gold leasing that is being done globally. Now, it's been held in London to potentially act as collateral for loans all over Europe. And we all know where the funds were going in Europe, as Doge is showing where the money is flowing and how the ebbs and flows are going. But this is leading ultimately to some good transparency. That's why you want serialization. I want you to ask those tough questions. Try to poke holes in it. I try to for my own myself, and because I have my own RSP and my wife's Lira, and I have to come to terms with these potential risks. And I'm never going to scoff at someone for telling me about doomsday scenarios or Mad Max scenarios. No way. We had a government that just froze your bank account. For what?
Yeah.
Because they didn't agree with you? Because you donated $5?
Yeah, I mean, look, you still have to protect against governments, and it's still a safe haven. It's still a hedge. But I'm still very much positive about what's moving forward, and I know it's going to be revalued here because it makes every country richer. It increases the asset side of the balance sheet and gives you money. It's an honest way of creating quantitative easing, because you're not printing the money out of thin air. You're waiting for the value of that product to increase. Now, it's not increasing willy-nilly. It's increasing in a way, for instance, where you say, okay, look, in 1980, gold hit $850 an ounce. The Dow fell to 850 points. That's a 1-to-1 ratio. You could buy a house in a really ritzy neighborhood in Toronto for a couple hundred ounces of gold. Today, it would take you thousands. Okay, so your average, 2-bedroom apartment is several hundred. Okay, so you can tell just by the ounce. Not by price, by the value of the ounce. How many ounces does it take to buy stuff? So, the Dow gold ratio right now is around, I'd say, between 14 and 16 to 1. At the peak of the dot-com bubble, it was around 40 to 1. In 2011, we fell to 4 to 1. In 1980, we hit 1 to 1. So this is a way to gauge the value, right? And this is something that you can use all the way up. So it's not just about price, because price is, what's $10,000, right? What does that mean? If I said to anybody, what's the value of the Canadian dollar? They don't even know. Government says, oh, we've controlled inflation, so we're dropping interest rates. Okay, but we import 60% of everything, so you just raise the price on everything. Mm-hmm. We have to pay more for everything we import. That's not fighting inflation. That's actually more inflationary, if you think about it. Plus all the taxation. Very, very much, very much an expense. So they're going to revalue. Jerry, we've got about a minute left. Let's start to talk about the silver and the implications on the silver market for that. Or do you want to just end off with the U.S. Treasury? I know you've got this posted up here.
Yeah, I mentioned this last week, but I really have to get into it because we are really focused, and everyone in the world is talking about this gold repatriation and the audit of Fort Knox, all these exciting things. It's been 50 plus years since we had a gold audit, but we are ignoring the elephant in the room. And we have the data coming from our wholesaler.
Okay.
That talks about that the U.S. Treasury is not only buying gold, they're importing gold, about $120 million as of last week for gold in the past 6 months. But in February, we're actually on track to it's on track to be a record buy month for silver. The U.S. Treasury has spent $400 million for silver from London. The repatriation is actually bigger in the silver space. Why are we not talking about silver? Why is it being ignored? Who wants the Canadian people to ignore silver?
Let's talk about that in the next segment. And I will tell you something about silver and Canadian silver production that you've probably never heard before. The number 18778-SILVER, the website, guildhallwealth.com. If you want to take part in the golden age and see the revaluing of gold and have it in your portfolio to take advantage, our opinion, The number 18778 silver, the website guildhallwealth.com. Hold it physically, take delivery, store it in a vault where it's allocated and segregated. You get the serial numbers, or hold it in your registered account like an RSP, TFSA, or even your kids' RESPs. Great vehicle to put gold in your kids' RESPs. Consider it.
Don't forget the kids.
Don't forget the kids. They're the future.
Yes.
It's been really great to see the tick up in gold and silver prices so far this year. I think we're up 10% over on both, and it's been really one of the best performers so far of 2025, and it's only getting started. And great to see people getting involved in the market again. I think last year several factors went into people not so interested in the gold and silver market. I think people were really feeling the pressure of inflation. I think they were really, chasing after the money and speculative aspects of cryptocurrencies, which, hey, there's fast, big money to be made, right? But interestingly, Bitcoin is not acting like gold 2.0. No. I'm sorry, I have to say it. Nothing against crypto in any capacity, but you were sold a bill of goods on that one, right? Anyone saying it's gold 2.0, it just doesn't make sense. That's like synthetic diamonds to me. It's like, ooh. Look, why are people buying synthetic diamonds? Oh, because they can't afford the real one. So they're making an economic decision to buy a
0.021 Bitcoin. I'm a Bitcoin holder.
Okay. There you go. All right, let's get into the silver market, because we're very, very excited about what's happening in the silver market. Silver, last year we did a lot of work in the silver market. We got, we traded between, I think, a low of $22.50 and basically $28 throughout the year, and they managed to keep it under $30 at the end of the year, even though we had reached about $34 last year. But we're comfortably above $30 an ounce. I think we're just waiting. We're on a launch pad right now. I think whether we break $40 this year or not, I'm not overly concerned. I think this is at worst a year where silver kind of just gains yardage and gets into the high 30s. If we're really lucky, we see the market break 40. We'll see what happens. What's interesting, though, is the amount of demand that's going to be on this, from monetarily speaking, whether it's people making the economic decision to buy the cheaper, more valuable product or more undervalued product, or the usages, things like EV vehicles, AI, solar power, and are we going to see new technologies that are going to demand even more of the physical silver? Now, we're already in deficit, Jerry. We're not pulling out enough out of the ground for what we're using. And I'm excited, potentially, about Canada's role in this. Right now, we're something like 18th in production in silver. But in 1970-71, we were the #1 producer of silver. Not Peru, not Mexico, Canada.
We have it in us.
We have it in us. The gold is there. The silver's there. Now let's go get it. What are your thoughts on silver? Where are we headed?
Well, we are seeing a culmination of, the historic understanding that, and the perception that silver is an industrial metal. It's used in all of these applications, from flat screens to you flip on a light switch, silver is in there, solar panels, photovoltaics, your grandma's silverware. It's all over the place. And as one said, I think Steve St. Angelo mentioned, you cannot have civilization without silver. 6 years straight now of less and less silver coming out of the ground. The demand just from solar alone is going to wipe out all of the silver in less than a decade. The mining CEOs pleaded to the Canadian government to include silver as a critical mineral, yet they will ignore that. Silver has grown, not just in industrial, but there's a monetary demand as well. Silver has always been considered as a form of money for centuries, and the destruction of the purchasing power of currencies is contributing to the return as silver as essential element of a stable monetary system. I do see a bimetallic standard coming back again, And it is a safe haven to protect your wealth against inflation, all of the things that you want it for. It's your tangible asset, but it's so undervalued. Today, we're at 91 to 1. If you're looking for a great deal, you're going to be buying silver. Buying 2,000 ounces of silver would be my strategy. Remember, silver has moved from just being a precious metal, then it became a strategic metal, and now it's a critical metal. Get your critical metal because when this market revalues, it will revalue your portfolio as well. The more silver that you have, the more room, the more maneuvers you can make. You know, a good person leaves an inheritance to the kids, and this is what I want to see. You're going to be able to do this for future generations. Don't just think about yourself. Think about the kids too.
And love the kids. You know, you want to be able to say, listen, do whatever you want to do. You're covered.
I let them play with silver maples.
Oh, that's always good to teach them what money's all about. But it's making me think about what's happening at the LBMA because there's more paper connected to the silver market than the actual physical, which has created a lot of distortions. You know, if you have all this fake inventory on your books, and as well you're making money on the arbitrage on the whole thing, you have no reason to want the price to rise higher. But if you now no longer are allowed to have that arbitrage, you're no longer allowed to have all of that paper against the physical ounces, which the Basel III rules are putting into play, then now you have true price discovery. How can we be in deficit? How is it that Guildhall, if we go to a wholesaler right now, they say, send us the money, we don't know when you're going to get your product.
Okay?
That's
right. It's exactly what they're saying now.
Now, I can see that that's a product of what's happening with the LBMA. Right? They're a part of that. They're trying to help with that, right? They have demands being put on them, and
credits being tightened.
Yeah, I mean, you don't know that the refiner in Switzerland just called the wholesaler to say, listen, I know that every month you have a certain amount that you're going to buy from us. We can't for the next 90 days. You're not getting anything.
Mm-hmm. And
you don't know that. That could be definitely happening.
The credit tightening is a bad fruit of all of the unrealized losses due to the bonds just dying underneath the U.S. dollar. The bonds that are backing up the entire financial system, that needs to be fixed right now.
Well, the credit tightening could also be that they're waiting 90 days to get paid from Costco, and Costco's probably ordering more, and they have to fulfill that because they're getting sold out because everyone's buying gold.
That's true.
Look, there's a lot to unpack on all of this. The number 18778-SILVER, the website guildhallwealth.com. Get some physical precious metals and take advantage of these markets. They've already done amazingly over the last decade. They've really performed well. They've been your hedge against inflation. They've really diversified portfolios because they're negatively correlated to the other assets because they're basically negatively correlated to the dollar. But that's going to change. It's now going to be the primary connector to the dollar. And I think that's where the big opportunity comes forward. The number 18778-SILVER, the website guildhallwealth.com. If you're going to invest in precious metals, why not just own it? Why have a counterparty? You're better off just owning the product. The counterparties are going to charge you storage. For product you're never going to take delivery of. You might as well own the product, and then worst case scenario, you could take deliver it, and as you've said, Jerry, you can pass it on for generations. You know, it has been around for thousands of years, and it's becoming part of the financial system once again. So let's talk about Basel III and the effects that it could have on pricing moving forward. Now, what it's going to mean is that gold is a tier 1 asset. It means that if you need a loan, this is pristine collateral. The U.S. dollar, cash in the bank, and gold are pristine capital. If you have paper gold, they give you a 15% haircut. You go, we got to buffer it. But if you have physical gold, you can use that as collateral and get loans. This is very important for the liquidity of the financial system. And this is huge that gold is part of that. So why wouldn't banks want to own it? That's reason number one. Because if it's a tier 1 capital asset, banks are going to want to hold this so that they have access to liquidity.
They need it.
Right?
More than ever before.
So you're going to have increased demand. That's number one. Number two, which we've discussed. We kind of circled it throughout the show, which is less reliancy on paper. And if you have less reliancy on paper, you're going to have more demand on the physical. So you just got a double shot of increased physical demand. Okay? I also think that central banks are going to want to continue to hold gold on their reserves, and that demand for gold to increase, because look, if you know that gold is going to revalue for the next several years, because I'm of the mind, Jerry, I don't want to see it revalue overnight. I know that's something some gold analysts discuss. Hey, they're going to close the market on a Friday, and by Monday, the market's up at $8,000, right? I don't think that's necessarily what we're going to see. I think you want to see a slow rollout of higher and higher prices where central banks continue to have the ability to accumulate. Look, gold was hitting all-time highs in December, and China's central bank was still buying gold. That means they weren't waiting for dips. They were buying at higher prices, knowing that the price is going to be higher still, right? So I think that's going to be a big part of it too. I think the demand on storage is also going to be there.
Very true.
Right? Because there's going to be demand to have vaults where you can put this stuff. How about you? What do you see as the benefits of the Basel III rules and what it means for gold and gold pricing?
Yeah, I think what we're seeing right now, the repatriation is not really much of as a result of tariffs impacting gold and silver directly. You cannot tariff or tax the import on gold and silver because they're 99.99% pure, and you can't tax money. But what we're seeing is the effects of Basel III rules becoming fully adopted in the U.S. by July 1st of this year. Basel III has fully classified physical gold as Tier 1 asset, which is significantly, as we're seeing, impacting this gold market, the largest market in the world, number one market cap. But what we're seeing is, as you mentioned, the derivatives that were created from the paper gold. If you have paper gold, you were once allowed to borrow off of the unallocated gold position. Now, with these Basel III rules have introduced more rules requiring 85% stable funding for unallocated gold, making derivatives less and less attractive. We're shrinking that down. And central bank demands are on. This is why we're seeing banks that are repatriating gold reserve. It's signaling a shift in this global gold policy. The price impact, obvious. The reduced reliance on the paper gold market, ETFs and certificates, and leasing, it's increasing the physical gold demand, and it's going to drive gold prices much, much higher. If you thought the printing press of our currency was bad and should be, destroyed,
abolished,
what about leasing, and then which ultimately is lending more and more of your gold to produce more and more capital? Because if you had fake gold on your balance sheet, guess what? You can get more money over and over again. What do you think 1 quadrillion of a derivative is? That's astronomical. But we're talking over, 4 to 7 quadrillion in toxic derivatives on the bank's balance sheets. How much of that is the gold markets? So this is going to wipe out these gold market derivatives, correct the problem.
So there's a purifying effect.
Yes.
As those assets either get written off the balance sheet or moved into other areas, they go down Exter's pyramid to the better and more sound money, which is at the peak gold and at the tip silver. So I think that you're going to see a moving of the verbiage on gold. It's going to go mainstream. People are going to start to understand it more and more. And in some ways, Bitcoin was a great step towards that, because it was really the first time people were discussing the idea of, an asset that doesn't have counterparty risk and things that keep governments in check and all of this type of stuff. So I think we're going to see even better and better days for gold and silver ahead. And I think the gains are going to just show for themselves. It's already happening in this market already, and it's only the end of February. So if you want to hold physical gold and silver in your portfolio, give us a call. The number is 1-877-8-SILVER. You can go to our website, guildhallwealth.com. You can go to our e-store, guildhallpreciousmetals.com, and pick up your first purchase. Tube of silver maples, couple 10-ounce bars. And by the way, we've been loading up on 10-ounce bars because we know there's going to be a run in the market and everyone's going to run out. And we've been loading up on those because as the price rises, people want the smaller products.
Exactly, you do.
You can hold physical gold directly. You can store it in a secure, allocated, segregated depository account, or you can have it in your registered account. That's your RSP, TFSA, Lira, LIF, RIF. And we always suggest that you start small. Get your feet wet, start to understand the pricing, go through the process. Comfort breeds confidence, and we want our clients to have good knowledge in this market and have a lot of confidence about what they're doing. We handhold you every step of the way. We're very service-oriented, and we can't wait to meet you at Guildhall Wealth. If you've missed a show, please check us out on YouTube, Rumble, Spotify. I'm not sure if I've missed any. Follow us on X, putting out some good stuff on X here and there. So
Good
follow
job.
us there at Guildhall WM. Jerry, great to chat with you this week.
You too.
And so great
As
to have
always.
everyone here, and can't wait to speak to you next week here on The Real Money Show on AM 640 Toronto and 770 Calgary.